How's everybody doing? It's February 4th, 2021, and I am concerned about the stock market. I think anybody can look at the market and say that they're a little bit nervous about it if they've got a lot of money invested in it, because it doesn't really make a whole lot of sense as to what's going on. And there's just an extreme amount of financial and every sort of uncertainty in the world right now that, it is sort of feels like, is this potentially a breaking point? And obviously I have absolutely no idea if this is a breaking point, but I am nervous about it. And this has been the craziest week of my career because I did go ahead and do something that I never thought that I would do in a million years. And I broke with sort of industry rules, and I told my clients that I was worried. And if they were worried, then we could consider talking about reducing their investment risk for a while until we felt like there was more certainty in the market. So that was a risk on my part because, I could be wrong 100%, right? And it's sort of crazy. And if you're going out and talking to anybody, then they're going to say, well, no, stick to the rules of, investing for the long term, keeping a diverse portfolio, all of those things, which still ring completely true. 100%, I'm not, I'm never going to disagree with that. I'm not going to disagree with the idea that the market will recover if it goes down. I'm not changing my opinion on that. I'm just a little bit too nervous to say, you know what, maybe instead of being fully in the pool right now, why don't we actually just have our legs hanging in a little bit, and if we lose a little bit of the growth because the market keeps going up and acting the way that it normally does, then, that's our loss, instead of being a part of some sort of huge, brutal event that might cause worse pain. And so my opinion as a financial planner is that our job is hard and important in only a few phases. So in the beginning, it's really hard to get clients. That's easily the hardest part. And then, you're earning their trust and their business, and by providing a good, solid foundation and financial plan in the very beginning, that part is hard work. I mean, we've got to learn a lot and take a lot of information in and give it out. That's where the initial money earned comes, but you don't really make any money in the beginning if you're doing it, say, the way that I do, instead of based on a commission up front for the money coming in. And then hopefully it's kind of sailing on easy street except for major events. So you're sort of earning money for not really working that hard all the time. But where we do earn our money kind of the most is sort of holding the hands during the shittiest times. So when the market does drop, in March, believe me, I was freaking out. The economy was closed. What do you think? I'm losing my mind, right? But I can't say, well, get out, because we're already, in it. We're already down. I don't know where that's going to stop. I actually thought it would go further. I really didn't think that it was going to rebound like it has, considering especially that the economy hasn't opened back up and COVID-19 is still a thing. It just really doesn't make any sense to me that the market has rebounded the way it did. If it rebounded a little bit and was sort of holding steady, I wouldn't be having this conversation right now. I wouldn't be making this video at all. So I have another video that I filmed over in another room in my basement, that is an opinion. That's my opinion. I've always kind of been afraid to voice my opinion on this channel because I don't really like the idea of getting super mean comments from people on the internet. that are just like saying mean things. It's not like I like that. Who the hell would like to put themselves out there to get roasted by a bunch of strangers that won't show their face? But I guess I'm going to have to actually do that because I feel like it's more important than me what's happening right now. Money is like the cause of kind of all of the shit that's going on in the world, so we need to find a better solution. So I'm basically going to go over there in that other room and I'm going to talk about sort of opinions on what I see based on what I know about human beings, especially in Canada, and how they feel about money. And in here, I'm going to teach financial planning without giving any opinions or trying to sell a goddamn thing. I'm not trying to sell anything. I legitimately don't want to take on any more clients until at least September anyways, because my son is home half the days. I like to spend time with him. COVID's still going on. It's really hard to focus on all these things. I just don't really have the time to grow. So, I'm going to focus a lot of my time on my clients and on making videos, and hopefully more people start listening to the fundamentals of financial planning because those don't change. And then I want to really open up a conversation about money and what we should do going forward. It's not like I have all the answers by any stretch of the imagination, but I think everybody realizes that something is wrong and needs to be fixed. And we can figure that out, I think, because people are smart. And I just would rather do that, proactively rather than reactively, where we're like, everybody's fucked, so let's now figure it out. Because then it's probably a little bit too late. There's going to be more pain. I think we can all see that something's wrong. It's not like my clients are like, you're totally out to lunch, Kent, and I don't feel that way. So I want to talk about this. And I want to talk about, the idea of talking to your advisor, going into your, own portfolio, and thinking about the idea of reducing the risk until there isn't such uncertainty. If you say this to your advisor, you'll be like, well, some guy on YouTube told me that that's the idea, and he'll be like, what an idiot, right? Like, that's just going to be probably the reaction you're going to get, and I understand that, and that's fine, and I will 100% admit that I'm wrong if I'm wrong about this in the future. But if I'm right, then that's a risk that I'm willing to take. This is my gamble telling you that I feel this, okay? So we can reduce the risk in our portfolio. I'm not going to talk about, what you should do to reduce the risk in your portfolio, because that's not my job. I don't have any idea what it's going to look like, but I know, okay, the less amount of exposure you have to the overall stock market, if the stock market crashes, then you're going to lose less money. It's pretty simple. So let's look at some bad case scenarios compared to the risk we're taking by reducing our risk for a year or two while we're thinking about, like, the economic uncertainty and seeing how the economy opens back up. So if you have $100,000 invested and you drop 30%, in a year or whatever, it's going to take you a 43% return to get back to, where you were. So it's pretty significant. It's not the worst. Like, it goes down, it's going to come back up, right? So, 30%, that's still scary as hell, but getting back 43 probably wouldn't take all that long, to be completely honest. But if you can cut that in half, so you lose 15% instead, it's only going to take you a return of 17.65% to get back up to where you were. Now, if we started getting into worst case scenarios, so like if the market drops 40% it's going to take you a 67% return to get back up to where you were, right? So if we can drop that in half to say 20%, now it's only going to take you 25% of a return to get back up to where you were. You start getting into like the really shitty case scenarios, so a 50% drop, well, you got to get 100% return. So like you have to double your money, which generally in like, you know, a growth portfolio is going to take somewhere between 8 and 10 years, kind of, if you're getting about 7 or whatever 8%. It's going to take quite a while to get back to that 100%. But you cut that in half, you only need a 33% return after a 25% drop. So the market just basically, it doesn't have to recover that much more than what it had dropped. And then 60%, well, that's pretty bad. It's got to go up 1.5 times, right? So it's got to go up 150%. So basically, my argument to reducing the risk until there's you know, a little bit more certainty comes with a caveat that you are taking a risk that you are going to miss out on some growth over the next year or two. If the market goes up, you're going to miss out on growth. So if we're looking at like an average normal market where, let's say, your portfolio returns, you know, 7%. Well, if you reduce your risk and you go from like a growth portfolio to say a balanced or a conservative portfolio, you're going to talk about somewhere in the range of kind of locking in the idea that you're going to get like 3, maybe 4% less for a year. So if you've got $100,000 and it would normally grow to like 106 or 7, you would only grow to 103 or 4. So you've missed out on 3 or 4% for a year. Now where you're going to lose by doing this is because you will not get the extra compound growth on that year. So you're like, well, okay, so I have $4,000 less. I'm not getting that compound growth for the rest of my life. That's the risk you're taking. The other risk you're taking is that it is impossible to time the market. So you can say, well, when do I get back in? So if the market keeps going up, you're not going to want to get back in because you're, you know, like, I want to wait till it goes back down because I don't want to lose money or whatever. You're expecting it to go down now again. And if the market is like going down like crazy, you're also not going to want to buy in because you're going to think that the world is ending. It's just the way that it goes. This is why this is a very difficult conversation to have, but it's also a hell of a lot easier of a conversation to have than say you have to stay in the market even though the market is dropping like significantly every single day. And you know, for the boomer generation, and I know that, you know, the majority of the people that actually watch this channel, I know which age bracket you fall into. Generally speaking, you are in like sort of the retiree age. And the big thing for you that I like to talk about a lot is like, okay, well, how much money do you need to retire? And there are a lot of people out there that have more money invested than they will ever need to retire. I talked about this in December, the idea of boomers giving back to their children earlier on potentially to maybe stimulate the economy. Well, what I'm saying now is, okay, if you don't want to do that necessarily, well, you might want to evaluate your financial plan and say, okay, well, how much do I actually need invested, you know, to support the income that we want? And how much is remaining outside of that? And if you feel that there's like a market risk to that money, then, you know, maybe you want to reduce that risk significantly. Now, nobody is going to like this idea in this business because you are potentially going to be talking to them about taking money out of their book of business. And they are going to absolutely hate that. So, but remember that absolutely nobody has any idea what's going to happen. I don't know what's going to happen. Your guy doesn't know what's going to happen. And your guy generally isn't going to just all of a sudden like figure out how to manipulate your portfolio to allow it to rebound the best or not get hit as hard if it's not ready for what might happen. So yeah, from here, I would just wanted to get that off my chest. From here, I'm going to go straight into the idea of financial planning 101 from the very beginning, and we're going to do it pretty aggressively fast, and then I'm going to go and I'm going to talk about my opinions on why these things are happening. So I'll probably get yelled at a lot on the channel over there, and over here I'm going to try and teach as many people as humanly possible kind of the fundamentals of money management so that we can hopefully get through this shit together financially, because I am really, really worried about a lot of people and what could happen. So thank you so much for watching, and we'll see you guys soon.